Okay, let's also turn to the RBI's monetary policy report, which has come in. It definitely says that the impact of COVID-19 on inflation is ambiguous. COVID-19 will impact the economic activity in India because of lockdown. For 2021-22, structural model estimates indicate inflation to be in the range of 3.6% to 3.8%. They've given some figures on CPI inflation as well. They tentatively projected to ease from 4.8% in Q1 FY21 to 4.4% in Q2 of FY21. Maithili Bhusnurmat joins us right now to help us understand the commentary that has come in from RBI's monetary policy report and the figures that it flags off. Maithili?
Well, yes, the RBI Monetary Policy Report, this is a requirement that the RBI has to come out with two monetary policy reports, one in October and one in April. So this is the April Monetary Policy Report. Remember, at this time, in fact, just a few days earlier, as per the original schedule, the MPC would have been meeting, but the MPC meeting was preponed and we saw that huge package from the Reserve Bank of India. So this is the Monetary Policy Report. It is very, very tentative. In fact, the RBI makes it very clear that almost every projection that you make is very hazardous, given the fact that we really do not know how COVID is going to pan out. Having said that, it's very clear that inflation is really no longer a worry, but the worry is more on growth. And though the RBI has not really quantified, what they have done is that in the case of growth, they have said that even though forecasts are very hazardous, because they're subject to large revisions with each incoming data, the RBI has come out with some projections. So on inflation, roughly they say that inflation should be lower. They expect food prices to be sharply lower, but they said some of this could be offset by the rise in non-food prices. But by and large, inflation is not expected to be a concern. It will be within the RBI's 2 to 6% and closer to the 4% mid-target. It is on growth that the RBI has given two scenarios. Scenario number one assumes that global growth in 2020 will be 3 percentage points lower than in 2019. Scenario two assumes the outbreak of COVID is contained a little faster and the loss in global output will be less, only half of what it is in scenario one, that is only 1.5%. And in these two scenarios, the RBI works out various likely outcomes for India's GDP growth. In the first, it says that in the more severe scenario, GDP growth for India will be 180 basis points less than what it originally projected. So if 5 was the original projection, then the new number would be 180 basis points less than 5. Of course, the professional forecasters' projection for 2021, FY21 was 5.5, but that was before all this hit us. So whatever your baseline projection would be, and I think it would be closer to about 5% originally, 180 basis points less than that, which means the growth as of now, which RBI very clearly says is a very hazardous projection, will be 180 basis points less than that. As far as the better projection, the better scenario is concerned, in this case, India's GDP growth will be 80 basis points less. So depending on what we take, whether we see scenario one, which is a bleaker scenario, or scenario two, which is a less bleak scenario, either case, GDP output will be hit 180 basis points in the more dismal scenario and 80 basis points in the more optimistic scenario. And both these, as per the RBI's graph, the bottom of the GDP impact on GDP, that is the worst phase, will hit us somewhere in Q4. So not even now, but further down, it will hit us as we see the impact of the lockdown, and depending, of course, on whether the lockdown continues at all. So everything has to be read, as I said, as very tentative, because the RBI clearly says forecasts are hazardous, but despite the hazard, they have ventured out to make a projection that inflation will be definitely within RBI's range, whereas GDP growth will take a hard hit depending on how we look at it, whether the dismal output for the global output is dismal or whether the global output fall is less than the 3%, which is what they show in scenario one. So both cases, not very happy, but let's hope it is scenario two, that where the global output falls by only 80 basis points in the GDP for India, because there the GDP growth of the world as a whole will fall by 1.5 percentage points as against 3 percentage points in the more dismal scenario. So clearly nothing very much for us to be happy about, but this is what the RBI sees things panning out as of now, and I repeat, as of now. So both scenarios bleak, one more bleak than the other.
Italy, Busnurmat, thank you so much for sharing your wisdom and experience with us. On that note, we're completely out of time here on this edition of Buy Now, Sell Now. Thank you so much for tuning in.